The rate setting committee for the Central Bank of Nigeria have decided to hold interest rates at just a concluded meeting. Ahead of the Nigeria Central Bank Monetary Policy Committee decision, analysts were mixed on how the decision would evolve. The CFG advisory, for example, predicted that level of rate cuts will affirm the 16.05% rebased inflation numbers, noting that their own computations using the adaptive gap approach to determine the old inflation rate series puts inflation today as 26.5%. Financial derivatives company, in their own November update, they saw the possibility of a hold, but a higher 60% probability of a 25 basis cut and 25% chance of a 50 basis point cut. However, these probabilities came ahead of the latest 16.05% inflation read, which was also lower than FDC estimates. EVI, however, noted the month-on-month higher inflation October print and inflationary effect of potential escalation in insecurity, further complicating a rate decision. Also, the Stanbic IBTC Bank Nigeria PMI rose to 54 in October 2025 from 53.4 in September, marking the 11th consecutive month of expansion, reducing the urgency for dovishness. Hello, this is a special edition of Global Business Insights where we dive into the headlines and bring perspectives to support understanding of the dynamic context. We focus today on the MPC, that's the Monetary Policy Committee decision of the Central Bank of Nigeria.
The committee decided by a majority vote to maintain the current monetary policy stance with an adjustment to the corridor as follows. 1. Retain the monetary policy rate, MPR, at 27%. 2. Adjust the standing facility corridor around the MPR at plus 50 to minus 450 basis points. 3. Retain the cash reserve requirement, CRR, for deposit money banks at 45%, merchant banks at 16%, and 75% for non-TSA public sector deposits. And 4, keep the liquidity ratio unchanged at 30%. Decision was underpinned by the need to sustain the progress made so far towards achieving low and stable inflation. The committee welcomed the continued deceleration in headline inflation year on year in October 2025 for the 7th consecutive month. This favorable development resulted from several factors, including sustained monetary policy tightening, stable exchange rate, capital flows, and surplus current account balance. In addition, the relative stability in the price of premium motor spirit, PMS, and improved food supply supported the pace of disinflation. However, headline inflation remains high at double digit, requiring sustained efforts towards moderating it further. The committee was, therefore, of the view that the steady deceleration in inflation across the three measures, headline, core, and food, in October 2025 suggests that the lagged impact of previous tight policy measures is expected to continue in the near term. Thus, maintaining the current stance of policy amidst lingering global uncertainties would allow the effects of previous policy rate hikes to sufficiently transmit to the real economy and further reduce prices. Members noted that the robust performance of the external sector, evidenced by the surplus current account and steady accretion to reserves, which have contributed to stability in the exchange rate and moderation in inflation. The MPC also commended the collaborative effort of both the fiscal and monetary authorities, which led to the recent upgrade of Nigeria's sovereign credit rating by major credit rating agencies and the delisting of the country from the FATF grey list.
Nigeria's central bank unexpectedly held interest rates steady, noting the progress in reduced inflation, but still seeing a lag that needs time for tightening to have its full effect before resuming further easing. There was an adjustment to the corridor around the MPR, that's the monetary policy rate. On the dovish side, it's now plus 50 to minus 450 from plus 250 to minus 250. Most analysts were seeing a rate cut, which would affirm the reported downward trend in price pressures. The Apex Bank had delivered its first rate cut in 5 years at its September meeting amid confidence that the downward trend in price pressures would be sustained. The CBN obviously want to see more evidence of that, considering all the geopolitical uncertainty, while also noting strong reserves, decent growth, sound banks, and expecting sustained disinflation in the near term to be supported by continued stability in FX markets. They have room to wait till next February meeting, by which time they would have better evidence. As seems to be the style of this governor, there were no macroeconomic forecasts nor specifics on outlook in the speech, which communicates what most will summarize as a cautious wait-and-see posture from an MPC yet to be convinced that inflation has been defeated enough. Like the governor said, inflation is still high. More business stories. Yesterday, Trump signed an executive order to prioritize America's global dominance in AI by launching the Genesis mission, a new national effort to use artificial intelligence to accelerate the speed of scientific discovery. The initiative charges the Secretary of Energy with leveraging national laboratories to unite America's brightest minds, most powerful computers, and vast scientific data into one cooperative system for research. As America and Ukraine draft a new 19-point plan for peace in Ukraine, following negotiations in Geneva on Sunday, markets watch crude oil prices, which could sink even further should a resolution lead to Russian oil being readmitted freely into markets. The return of risk appetite to markets also boosted oil prices as the demand-supply dynamics still capped gains. Brent crude yesterday at $63.43 a barrel. After last week's turbulence, Wall Street stocks rallied yesterday, helped by Alphabet as the market rebounded into the Thanksgiving holiday week. The tech-heavy Nasdaq index gained over 2% and the S&P 500 climbed more than 1%. Shares in Tesla and Alphabet both soared over 5%, also as confidence was boosted after Chris Waller, a Fed governor, said the weak jobs market justified a cut next month. The U.S. Bureau of Economic Analysis yesterday said it was canceling release of the GDP estimate for Q3. This was because of the recently ended government shutdown, which made required data gathering and analysis impossible. The United States, at a Brussels meeting, has asked the European Union to make its regulation of the tech sector more balanced if it wants to see a reduction of US tariffs on steel, aluminium imports from the bloc. This was as EU ministers also urged US Commerce Secretary Howard Lutnick and Trade Representative Jamieson Greer to implement their July trade deal with cuts to US tariffs on EU steel and aluminium products, as well as removal of tariffs from EU goods such as wine. Shares in Novo Nordisk sank by about 11% after reporting that semaglutide, the active ingredient in Ozempic, failed to treat Alzheimer's disease in late-stage trials. This is the latest setback for Novo Nordisk, whose shares have plunged nearly 2/3 in 2025. South Africa's largest gold producer, Harmony Gold, said it would invest up to $1.75 billion in a copper mine in Australia as costs of gold mining go up. Copper production would begin in 2028 as it sees global copper shortage driving the price of the metal up. And in Nigeria, government-owned oil company NNPC Limited announced full results for the year ended 2024. Profit after tax came in at 5.4 trillion naira and earnings per share of 27.07 naira, up 64% from the last year. Revenue was 45.1 trillion naira, also up a strong 87.9% from 2023. NNPC Limited unveiled a strategic roadmap to drive sustained growth and support Nigeria's security transition through 2030, also prioritizing increased oil and gas production and targeting a $60 billion investment pipeline across the energy value chain. The report did also alert that unaudited 9-month to September 2025 results did show a 10% drop in total revenue and 14% drop in earnings before interest and tax, attributed to drop in average crude oil prices from Brent crude standards, $81.8 per barrel. That's average crude oil prices in 2024 to $69.9. That's average crude oil prices for 9 months in 2025. Currently, Brent is flirting with $65 per barrel, so 25 results will be lower. The report was also mute on the calendar for an IPO on an international or local listing. Saudi Aramco, for example, is listed on various stock exchanges. According to the report, NMPC Limited intends to identify qualified technical equity partners to repurpose the refineries for sustainable operations. However, the report does not specify timelines for refinery rehabilitation or address accountability for funds previously expended on unsuccessful refurbishment efforts. Reported return on equity for NNPC Limited was 13.9%. Saudi Aramco, in its own 2024 report, saw ROE of 27.3%. That's about double NNPC Limited returns. Asian share markets rallied as hopes grow that the Federal Reserve will cut interest rates. This was also as investors piled into global technology stocks, shrugging off concerns of a bubble in the sector. Well, that's it on this episode of Global Business Insights. Thanks again for watching. This is Bode of Shasami. Bye-bye.